All right, everybody. Stocks by the numbers. Welcome back. As per request, we're looking at Ambev South America, ticker symbol ABEV, listed here on the New York Stock Exchange. Stock closed $2.10, down 2 cents, about 1% here on the day. This is essentially an international arm of Anheuser-Busch. So they're distributing, packaging these beverage products, and they're kind of just passing them out in the South American market, if you will, and of course the Caribbean and the Canadian markets as well. But you can see production, distribution, sale of beverages, beer, carbonated soft drinks, non-alcoholic, non-carbonated soft drinks. So I have two concerns here. First of all, in my opinion, the numbers actually look pretty decent. However, if we just back up this chart here, you can see we had this big run up here, the late 90s throughout the 2000s, right? We hit about 2013 and then we've been trending back downward. So if we continue to drop, the next key level looks like about here, maybe about like 160, 1.5 potentially. And that's what raises a red flag, in my opinion, because I have two issues here. First of all, it's been in a downtrend for like 11 years, right? But also on the flip side, a South American company, in my opinion, I am always worried about nationalization. And I just think back of companies like Petrobras, ticker symbol PBR, oil company got nationalized. And usually, this is why international companies, in my opinion, sometimes are a little more difficult to really kind of predict and forecast where it could be, 3, 5 years from now, which is probably why most of the money flows into our domestic American stocks. But, again, not saying anything negative about every international company, right? Look at Rolls-Royce. But right here, ABEV, as we see, has been in a pretty big downtrend. And I drew out this trend line here. This is going back to the tops, March 12th, 2018, and just kind of looks like it's touching that one as well. April 2nd, 2018, coming down to that recent top. July 24th, it looks like, 2023, that week. And you can see that it has kind of just consistently been trending downward. It's been making even lower lows as well. But this support trend line could potentially be an issue here. And if we go back, I drew this from, looks like the end of October 2008. Looks like it touches right there, maybe the third week of November 2008, and just cutting across to that recent big drop down, which was in 2020. It was right here, the week of April 20th, 2020. And that's cutting across. And you can see how the stock recently, this is going back to the middle of April, so about 2 months ago, no, 3 months ago, my apologies. You can see we dropped down, right? Slightly broke below that level and then had a nice strong bounce. Look at that solid green candle. Boom. Basically back to that fib, 245. Then we kind of start to reject and start to pull back. And you can see as it clean breaks here below both of these trend lines, you can see, look at that next candle. Let me zoom in for you. Look at that next candle. That wick comes right up to that support trend line that it just flash broke below, and it rejects. And you can see it tried to recently, just last week, come back up to this bottom trend line here, and then it looks like it rejected and started to come back down. So if we back out, this other trend line that recently got broke below and rejected, as you see, is going from the bottoms of October 18th, 2021, that week, to June 13th, 2022, and just cutting down across the bottoms of those candles. And you can see it did want to reclaim that level. So it first dropped and wanted to reclaim this level going back to 2008, and then rejected, and then tried to reclaim just the shorter term support trend line going back to 2021, and then apparently rejected as well. So right now in the technicals, in my opinion, this looks like it can continue to keep selling off. But if we look at the numbers, though, in my opinion, we do have a little bit of a different story. We have a market cap here, we'll call it 33 billion. We're getting paid a dividend yielding about 6% right now. We're trading a little over 11 times earnings. And of course, we have a beta of less than 1, believe it or not, even though the stock has been consistently dropping. Beta, again, is the volatility of the stock in relation to the overall volatility of the market. We can see the EPS side is nothing, worth writing home about. However, they have been coming in above those expectations for the last 4 quarters in a row. And we can see that revenue seems pretty solid here. A touch below 4 billion, 3.8. 416 billion, 4 billion, 409 billion. So we're kind of steadily holding the line here at about 4 billion a quarter, it looks like. And you can also see that even though these margins are bouncing around, we were as low as 13%, we got as high as 22%. And I know they were saying last quarter, if you look at the report, right, they saw the profitability margins drop, as you see, about like 3.5%, 4% quarter over quarter. And also, like, the markets were kind of mixed. You know, what one market was up, 7, 8, 10%, but another market was down 8, 10%. So you kind of have these inconsistencies, and this is why, again, something like this, I mean, in the numbers, it can stage a rally. We have, if we bounce back above this support trend line and we have this tightening here, we can eventually, pop out and maybe get back up to like $3.5, $4 a share. So you do have some potential here with this company. But in my opinion, I'd probably personally, I know our markets are high and we had a big drop today, but I'd probably personally just look for domestic companies here in the States who are in similar sectors, but are just more consistent for the most part across the board. And of course, we have companies like Coca-Cola, symbol KO, and of course, Coca-Cola Consolidated, symbol COKE, which recently did a nice big share buyback and ran up to new highs and has been looking pretty solid. So in my opinion, again, I mean, 10, 11-year sell-off, I just broke below support trend lines. Again, we'll get to the numbers in a second, and in my opinion, they do look good. But again, if I was to park assets, park some capital somewhere, I probably would look for more consistent domestic names. But even recently, we can see Barclays. And again, in my opinion, I do think it could be viewed as undervalued in the numbers, but you have Barclays coming out, recently adjusting their price target, keeping them equal weight, dropping it from 3 to 2.5, which is kind of almost where the stock is now. I know it's, 15, 20% higher, but, they say 4.5% organic revenue growth in Q1. See, but overall revenue decline, earnings flat. Profit beats estimates. Brazilian home market does well. But they also talk about, this was back in March. Barclays downgraded them to equal weight from overweight. And originally was 3.5. They lowered it to 3, right? And now back in May, they lowered it from 3 down to 2.5. So this is what I mean. Obviously I'm always honest with you guys, and I do not know everything about this company. So I'm sure it's being downgraded and trending downward for over a decade for a reason. Revenue decline. Then net profit slides 11%, missing forecast. So this is what I mean. Like, when it comes to these quarters, these earnings reports, like, we have some hot, we have some not. And what do I always say about the consistency, right? The one thing I will say is the numbers are increasing for the most part over time. If we back up here annually, you can see going from 2019 into 2020, you can see the revenue dropped, about 2 billion and change to 11 billion. Then it comes storming out over the last couple of years. 13.5 billion, 15.4, almost 16 billion. And the profit margin as well. I mean, it dropped from 22% down to 17%, and then up to above 18, and basically holding that line there at 18+%. So technically, the company has growing revenue year over year. Yes, quarterly, it may be a little inconsistent, but overall, it seems like it's growing its business, and the profitability is kind of holding the line. So we've seen worse companies, if you will, in the health of fundamentals. And you can see the dividend drops from 10 cents down to 7 cents a share in 2020, and then goes right back up to 11, 12, 13 for 2023. The company holding some cash on hand here, and the debt is really nothing too negative, in my opinion, especially looking at the value of the business, right? Even after pulling back for 10 years, we have market cap 33 billion. Company's holding 700 million in debt. That's basically a drop in the bucket, in my opinion. Free cash flow for Q1 24 was negative here, 60 million, but if we go back to the year before, you can see it was minus 333 million. So the company's doing something right. The cash has dipped down a little bit, as you see, 3.5 billion here in Q3 of last year, dropping to 3.3, dropping to about 2.5 billion. So they lost a little bit of cash, but they keep increasing that dividend slightly, keep paying it out yearly. So, in my opinion, your principal is probably going to take a hit, but over the longer term, they could eventually bottom out, and then people may start to see, oh, this company looks undervalued. This company, a lot of these numbers seem to be growing, so we're going to park some capital over here in Ambev. But again, in my opinion, South American company, just myself personally, I'm always a little hesitant, but 2.5 billion cash on hand, 700 million. We have short-term liabilities outweighing short-term assets, but complete opposite on the longer term. And if we look at the balance sheet here, we have assets sitting here at about 27 billion, total liabilities a touch below 10 billion. Total assets minus total liabilities yields total equity, and we've been bouncing around as low as 15, as high as about 18 and a quarter, but we're sitting here at about 17.5 billion total equity right now. Again, very little debt. That's giving our book value per share of $1.10, so we're trading almost 2 times book. A lot of the cost of goods sold, you can see basically the low 2 billions across the board. So they're keeping costs in check, operating expenses, high 900 millions, to very low 1 billions. That's basically being held in check. Operating income bouncing around as high as 938 million, above a billion actually. Got as low as 640. We're sitting here 869, right? So we're kind of middle of the road here if we average out a lot of these numbers going across the board. So even though on one hand it is inconsistent potentially quarter over quarter, it does look pretty steady over the longer term, if you will. So the PE now sitting here sub 11.5. That's the lowest it's been going back the last 7 or 8 quarters. Price to sales down to 2. That's the lowest it's been. Price to cash flow 6.5. That's the lowest it's been. Price to book, sub 2, that's the lowest it's been. Interestingly enough, enterprise value, which again is what another business would be willing to pay for this business, is actually a couple of billion lower than the current market cap of the business. So they might potentially continue to beat this up, maybe sub 2, bring it down to like 30 billion, sub 30 billion market cap, and then it might bottom out and start to climb up here throughout the last 6 months of the year, and potentially rolling into 2025. Our return percentages right here, return on assets just kind of holding that 10%. Again, return on equity, same thing, basically middle of the road here. The average of these numbers, 17.25%. Return on invested capital, about 17%. Gross margin percentage was down at sub 44, got up to almost 50%. It's sitting here at 47%, right? So that's what I mean. Basically middle of the road here for the most part. Operating margin did hit high teens a couple of times, got up to 25.5, sitting here at 21.25. Could be better. But again, we know how these analysts and how a lot of these long-term investors view these numbers, right? If we don't see like consistent up and ups, we might say, hey, you know what? I'm just going to sell it, and there might be better opportunities somewhere else. I'm not going to leave it here. Or like we saw with a stock like PayPal, perfect example, right? So the operating margin dropped like 0.5% quarter over quarter. They took that stock from 70 down to 50 and had to hit new lows. So it really seems like it's amazing. Also, not to go off on a tangent, excuse me, I'm choking, but it amazes me because on one hand, they'll talk about like the resilience of all these businesses, and that's the reason why markets are, raging and climbing. But again, an example like PayPal, you had a slight dip in the operating margin. All of a sudden, the stock drops 30-40%, hits new lows. So on one hand, you're trying to reward a handful of companies for their quote unquote resiliency, while on the other hand, anyone who slightly had metrics dip down is being absolutely shredded. So, kind of hard to really dictate what's going to happen with a lot of these stocks quarter over quarter, and it's like the Wild West out there, in my opinion. But back to reality. So EBITDA was mid to high 20%, got above 30, 33, sitting here at 29.25. And net margin percentage, again, not the highest it's been, sitting here at 18.25%. So these numbers really aren't that bad. You know, technically you have something like the inventory turnover dipped down, but this seems like a lighter quarter. And if we compare it to this time last year, we're technically up, right? So this is why I think there are some potential negatives, but at the same time, there are positives as well. And this is why I think, they're highlighting like that 4.5% organic growth, right? So over time, it could be good. But again, my only concern really is that it's a South American company and it's been in a downtrend for a decade. Our debt ratios are basically holding steady. We have our dividend. We come over here to the earnings and you can see, look, EPS has been solid, eight beats in a row, 8 quarterly beats in a row. Switch over annually, 50-50. If we look here at the revenue, we can see we are growing nicely, technically, again, going from 3.5 high threes, and then we start to break above 4 billion, but coming in slightly below analyst expectations, missing 5 of the last 8 quarters on the revenue side. Switch over annually, 50-50. Right? This is what we mean when we talk about inconsistencies. However, if you look at the longer term picture, you can see they were holding like 14.6, 14.7, and then actually started dipping down for years going into that pandemic, and then just started exploding coming right out. Probably because they sell beer. But moving forward, they're basically looking to hold the same exact revenue that they just reported, right? They closed 23 at 16.05 billion. We're forecasting 16.04. Then we're looking to potentially get near 17 and then 18 and then almost 20. So if these numbers do actually come in over the next 3-4 years, and assuming they don't take on more debt, and assuming that, there's no turmoil or government issues throughout South America, then we could potentially start to see some growth here over the next 2-3 years. But again, I feel like you're kind of buying into a rough story. It's a rough environment to begin with. So if you were to take a position here, in my eyes, at 210, you turn around 12-18 months, the stock's at $1.60, you can't be shocked, right? In my opinion, that's the way I would lay it out. But you can see the Brazilian beer market seems to be its best market right now, bringing in almost 8 billion. But across all of these other markets, it's bringing in a couple of billion across the board. You can see Canada about 2 billion, right? Central America, Caribbean, 2 billion. And Brazil, again, started to grow nicely. Latin America had a little bit of a dip down. Central America, Caribbean slowly climbing. Canada just kind of holding like that 1.8 to 2 billion. But if we look at the supposed fair value of the business, right, something that I like to do occasionally, we can see we have total equity 17.5 billion. Our debt's only 700 million. We come down here, we can see for 2023 we brought in about 16 billion. So 17.5 is like 33.5 minus the debt brings us to like 33 billion, which is our current market cap. And if we come over here, again, we already subtracted a couple of $100 million for the debt, and we have 2.5 billion in cash. So that would bring us to what, like 35.5 billion. You could also look at short-term liabilities outweighing short-term assets by about $1 billion. So if you want, you could even take that off the top. But now you're looking at like 34.5 billion, which, in my opinion, is why it may have dipped to that $2 psychological level and then had the bounce and tried to reclaim that line, right? So in my opinion, the quote-unquote fair value of this business is like 30+ billion, and that's the current market cap of the company. Now, just a heads up, this company does pay a dividend, but as you see, it's once a year, right? Gets paid, looks like, about the first week of January. 6% yielding right here. So again, technically in the long term, in my opinion, you kind of have to keep an eye on these technicals and these trend lines to see if it rejects and they beat it up and continue to, bring it down. But in my eyes, the fundamentals themselves really don't look too bad. And let's switch over to FinViz real quick. I just want to check. Yeah, it's saying 1/4% of the float is shorted. Very interesting. But let's switch over to stock charts here because I noticed something on the RSI as well on the weekly. But if we look daily, we can see we were up to 213. We hit a low of 210. We closed at 210. So kind of almost making that bear hammer. So we might drop back down to the low twos. Excuse me. And also, if that does happen and we start to consistently pull back for the next couple of days, we may potentially see a MACD crossing to the downside, which could add to the sell-off as well. And you can see, look at these multiple rejections here going all the way back to right after the ball dropped here in January. You can see double rejection there off of the 200-day and the 50-day. Broke up above for one day here to start off March, it looks like, and then rejected off both moving averages. We come down here, we can see again, double rejection off the 50-day, popped up the following day, and then chunked right back down to the mid-Bollinger Band. Basically, same thing happened here, middle of May. It ran up above slightly the 50-day and then tanked back even lower, and now you can see we're riding low, and even recently, about a week and a half ago, rejected off the 50-day again. So in my opinion, it's really looking rough, and it seems like you only have these big rallies when we have the RSI completely bottom out and go sub 30, and then we have a little bit of life come back into the stock, and then it kind of just starts the sell-off all over again. So, again, could be potentially good long-term, but I don't know. In my eyes, I'd probably stick with more domestic winners. Also, again, this is the international, supposedly Anheuser-Busch, so I know they had the backlash and the boycott here in the States, right? So that domestic stock went down. I don't know if it would really affect this international company as much, but who knows? You know, that might have added to. I don't know. Who knows? But if you look here, if we go back from that last big run-up, this was basically this time last year, and you can see, look at that RSI, right, was the closest to 70 going all the way back to here, the year before. No, I'm sorry, 2 years before. My apologies. So we kind of hit that 70 benchmark and then went straight down to that 30. Then we started to run up, and you can see, got to about 60, it looks like. Then we started to beat it up and bring it back down. Then we had a little bit of a pop as we approached that 30 benchmark. Then we headed right back down. And now we saw a little bit of a pop recently after coming back to that 30 benchmark. So, if you really want to trade it, maybe you can make yourself a quick like 10-15%, but buying it down here in the low twos, RSI gets a little oversold, then you have a pop back up to like 220, boom, you're in and out, make yourself a quick 10%. In my eyes, that's probably how I would play it, because again, if the numbers, the numbers aren't the reason why the stock is being kept down. So again, it's probably something that I am not currently aware of, or it's just not something that I'm just not thinking about right now. But again, in my opinion, I just feel like I'm always very hesitant with South American stocks. But again, technically in the numbers, it looks decent. Over the next 2-3 years, if we turn around and like I said, it's at $3.50, $4, it would make sense to me in the numbers. But again, we have been down since 2013. So if you know a little bit more about this company, why it's been down, why they're beating it up, why other businesses might be they might be more attractive over the next couple of years as opposed to Ambev, let us know down in the comments section. If you feel that this is an overreaction and you also think that the numbers look decent and you're just, accumulating shares every chance you can because maybe over the next 5-10 years it's going to rally back up to $8, $9, $10 a share. Let us know that in the comments section as well. But that's pretty much it, and I'll end it there. So once again, this is Stocks by the Numbers. I want to thank you guys for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually pretty quick to reply. Thumbs up algorithm helps me get more eyes on the channel, and of course subscribe to the channel. That is our handshake agreement. That is how you help me help you. But more importantly, moving forward, like I always say, I understand that markets are rocky, they're volatile, and they're very uncertain. So I want to wish all of you success. Hope everyone makes a couple of dollars. Thanks for your time. Have a good day.